All right, y'all. Let's talk about the truth about private trusts. Look, there's a lot of people who are new, and even though I've done hundreds of shows of here on the foundation, there's it's obviously that something that isn't really talked about. There's a lot of misconceptions, and I just want to get straight into this. I don't want to take up too much of your time. My name is Sot L, Seeker of Truth L, Speaker of Truth L, also known as, I'll be doing my pancake dance, be pancaking toes, stepping on toes. Because, here at the foundation, we're looking to reestablish the foundational understanding of how we do business in the public, what the public is, what is doing business, what does it all encompass. But fundamentally, I think one of the biggest things is we don't have our private estates in order. So let's just get into this. I want to discuss the truth about private trusts. Whether you've heard about them or not, whether you think they are illegal or if you think they will get you in trouble, it's possible. We'll get into that. But I just want to jump into this, and I want to say peace to everyone who's checking out the show. I want to say peace to everyone who checks out our current events that I do every single day because it's a lot going on. Trying to, read between the lines and speak between the lines. And while I'm speaking between the lines, hoping you're reading between the lines. But, peace to everyone who's checking out the show. So let's jump into this. Let's do it. So I got three things I want to teach you about with regards to the truth about private trusts. And when I get into this, as I said, sometimes I can be long-winded. I wax poetic, lyrical, whatever you want to talk about, because this means a lot to me. And if you know anything with regards to my history, trust was something like I was destined to not only know and utilize, but, I guess obviously teach people about. So, among other things, check out the website, welcome to the foundation.com. Appreciate y'all, sign up for the email list. Appreciate y'all. Let me jump into this though. So, when it comes to the first truth about private trust, we need to understand that they are contracts. They're contracts. It's bottom line, contracts. And we need to get all of the misconceptions out of our mind with regards to what we know and what we don't know. This is Cornell Law. It's a law school. Legal definition of a contract. A contract is an agreement between parties, creating mutual obligations that are enforceable by law. The basic elements required for the agreement to be legally enforceable are mutual assent, expressed by a valid offer, acceptance, performance consideration. You got capacity, legality. In some states, elements of consideration can be satisfied by a valid substitute. Look, let's not get into that. Contracts that are promises that the law will enforce. Contract law generally is governed by common law, state common law, while general overall contract law is common throughout the country. So they're saying overall so there's a common law with regards to contracts. I just want to point that out. If a promise is breached, the law provides remedies, often in the form of monetary damages or in limited circumstances in the form of specific performance on the promise made. So there are, and let me just jump. So we have, what do we have? So we have types of businesses, and just stick with me real quick. And this, and this is on the fly. I didn't want to really prepare this because I wanted to, do this as I normally would. And let's go to the IRS because I like to do official sources, quote, official sources. Like I don't like the secondhand stuff, in law, secondary sources. We like primary. So when beginning a business, you must decide what form of business entity to establish. Your form of business determines which income tax return form you have to file. The most common forms, I want to say this, most common forms of business. So the most common forms would not be indicative that they're the only forms. Let's point that out. Look at the language. It's not the only form. Sole proprietorship, partnership, corporation, and S corporation. A limited liability company is an LLC or a business structure allowed by state statute. Legal and tax considerations enter in selecting a business structure. This is very important, right? So when you're dealing with types of structures, it's important to understand that there are statutory structures and there are private structures. A contract is an agreement between parties creating mutual obligations that are enforceable by law. It doesn't necessarily say that they're governed by law, but they're enforceable by law. And the parties can choose the law. And let's just jump to that, right? So we go to the HAGUE Convention on Trusts. And it's really the Hague Convention on the Recognition of Trust, right? Here's the full text. Okay, we want the PDF. We're going to check out the PDF, right? The convention applies to trusts created voluntarily. So this is the convention on the law applicable to trusts and on their recognition. Why does this apply? Because, how many parties have adopted this convention? A trust shall be governed by the law chosen by the settlor. Where the law chosen under the previous paragraph does not provide for trust or the category of trust involved, the choice shall be effective by the law specified in Article 7. Article 7, it's just basically how statutory jurisdiction is imposed over a trust. But a trust can be governed by the law of the settlor. So let's go into, I'm going to do, what is this? Article 1, Section 10, right? And listen, this is important because we have to keep this in perspective. I can't spell. There we go. That'll work. So that's the Congress, congress.gov. We like those sources. Taking a while. They need to pay their internet. All right, let's try this one. So we got U.S. Constitution. No state shall enter into any treaty, alliance, or confederation, grant letters of marque and reprisal, coin money, emit bills of credit, make anything but gold and silver coin, tender, payment of debts, pass any bill of attainder, they didn't say or, bill of attainder, ex post facto law, or a law impairing the obligation of contracts. And that's why the Hague Convention says what it says, right? I closed it. Where it says a trust shall be governed by the law chosen by the settlor. Because no state shall pass any law impairing the obligation of contracts. Okay, so understand that this is the first truth about private trusts. They're not trusts, they're contracts, man. And if anyone tells you something different, then there's over 80 different types of trust. And anyone tells you they know them all, they're lying to you. I don't know them all, but I do know this. And I'm not giving legal advice. I can't give legal advice. This is not legal advice. If you need legal advice, you need to talk to an attorney or a lawyer. I don't have a bar card. I've never applied to have a bar card. I've never gone to law school. I'm not qualified to give legal advice. But I do understand, contract. I do understand laws are written in legalese, the language of the lawyers and the judges, actually the language of commercial contracts and private contracts too. essentially. And you need a law dictionary. You need a law dictionary to understand what these things are saying. So like, let's look at the law dictionary. Let's look at Black's Law Dictionary. And I'm just doing this so everyone can know. And we're doing it. Look, Black's Law. Let's do images. I'm gonna look at the image. Look, here's a Black's Law Dictionary. Beautiful file. This is the 11th edition. The 11th edition. They have many editions. I like the 4th edition. I had to buy the 7th edition in college for my corporate business law. It was a long time ago. But in order to understand contracts and contract law, you got to understand that it's not the same as Webster's dictionary. You got Black's dictionary, Black's Law Dictionary, and you got Webster's. So private trusts are contracts. And if I'm going to be technical, they only come under trust law with regards to how the income is dispersed and how the income is taxed. In every other situation, they are contracts. They are contracts. The Internal Revenue Service recognizes 3 different types of trust: simple, grantor, and complex. Complex trusts. Let's look at it. Oh, law. Complex trust. A complex trust is one that does not fulfill the Internal Revenue Service conditions of a simple trust. The expression complex refers to the trustee's discretion rather than the trust provisions being more complex. The trustee has discretion. It's not necessarily that the trust itself is complex. It's complex with regards to the discretion that the trustee has. A complex trust must engage in at least one of the following 3 activities each year to be regarded as such. The trust must keep part of its income rather than giving it all together to the beneficiaries. The beneficiaries must receive part or all of the trust principal, or a portion of the trust assets must be distributed to charity organizations. When calculating taxable income for the year, complex trusts can deduct certain expenses. The amount of any income that trust is obligated to distribute for the year is deducted. The amount of any income. That's why I love being able to see this stuff, man, because it makes me giggle. The amount of any income the trust is obligated to distribute. Obligated. If it's private and it's not. If the grantor, if the settler can establish the law, is deducted. If the owner has a large estate or many beneficiaries, a complex trust may provide additional estate planning options. These are, the secrets. Number 2, contracts are private. Think about it. Music. Let's think about music. This is something that we all, understand, right? An artist sells their soul to the devil, right? They sign a contract in whatever, blue ink. I don't know what it is. I have no idea. But bottom line, what I look at that is, your soul is your work, right? Part of your soul is, your creative work, creative energies and products, basically, if you want to talk in a commercial sense. Your creative works, right? And in contracts, in most artist contracts, artists own 0% of their work. They receive 0 rights to their masters or their originals. Why? And how is this legal? Well, because contract makes the law. Hopefully, we're putting 2 and 2 together. I want to touch on some Supreme Court case law. I know we all hate it. We hate it. Why do it? I was already in school, man. Listen, this type of private education is different than public education. These are actions. This is what is it? Brigham versus the United States. It's basically 4 cases. Talking about the first actions, 2 actions. It's 3 cases. Talking about the refund for federal income taxes. Both actions present the questions of fact and law, and one opinion will suffice, right? let me just read this. The first action, number 641, is suit brought by the plaintiff as one of the beneficiaries under a trust under the will of Margaret Brigham. So, it was a trust, but it was a trust under a will. So I guess, the will created a trust, and this happens all the time. The trustee is in each of these trusts is entitled to fractional share of the beneficial interest of the building trust, the Alaska Building Trust. The sole asset comprised in the trust, res, is an office building known as the Alaska Building, located in the city of Seattle. The suit seeks a refund of taxes paid for the year of 1935. So they want a refund of taxes that was paid. The second action is brought by Stanley Bolster, trustee under the will, the same will, and seeks a refund of income taxes paid for the years of 1934 and 1935. Now, just right here, 1934, look at these years, because trusts are nothing new. This trustee is also entitled to a fractional share of the beneficial interest, blah, 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 blah. Both actions present the same questions of fact and law, and one opinion will suffice. On April 16th, the question as to whether the Alaska Building Trust was a strict trust or an association, taxable as a corporation. So they're saying, was it a trust or was it an association, which allowed it to be taxable as a corporation, which brought it into the state statutory and likely federal statutory jurisdictions as well, depending on, whatever hey. This question came before the court in a similar suit by another beneficiary, and it's decided that the latter was a strict trust and taxable as a trust. The same question has been raised in the present cases, but is now banding, and the government concedes that the Alaska Building Trust is not a taxable as a corporation. Okay, so they're saying that it's not. It's not The government also stipulates that the plaintiffs in these suits are entitled to deduct from their returns their respective proportionate shares of a depreciation loss suffered by the trust. Okay, so check this out. Watch this. So they're saying that the trust suffered a loss, whether it was loss due to appreciable value of the property, whether it was an actual monetary loss, doesn't matter. They're saying that the trust received the loss, and they're trying to claim that loss on their individual taxes. And I'm not a lawyer. I don't know what I'm talking about. I'm crazy. Don't listen to me. So basically, with respect to this conceded allowable deduction from their respective returns, judgment may be entered for the plaintiff, blah, blah, blah. This remains a question whether plaintiff's taxpayers are entitled to a deduction in their individual income tax returns for the proportionate shares of conceded operating loss suffered by the Alaska Building Trust in the tax years of 34 and 35. No extended findings of the fact are necessary. The history of the building trust may be found in the previous case, Supra, and the findings there in this respect are incorporated here by reference. It may be noted that the Alaska Building Trust was not to continue in any event beyond the 11th of April, 42, before which date the sale of the trust property was to take place, blah, blah, blah. Distribution made of the proceeds, of course, would be going to the beneficiaries. In the meantime, the trustees had full power to lease or dispose of the property by sale. So the trust was going to terminate at a specific date. Until then, they had full power. It is well established. Deductions are a matter of legislative grace. So it's a public allowance. Legislative grace. And no deductions will be allowed for losses unless the alleged loss falls within one of the categories enumerated in the statute. The taxpayers must show he comes within the terms of the provision of the statute allowing deductions, right? It cannot be said that the individual taxpayer here lost any of his own assets in the view of the recognition by Congress of the individuality of trust in income tax law. Listen, the Internal Revenue Code, sections 161, 170, 161, all this. A trust is a separate and distinct entity from its beneficiaries. So they're citing previous case laws. And that's why I love reading case law, because it gives me more case law. It was the trust that suffered an operating loss, not the individual taxpayers. So if the trust is a separate and distinct entity, how can an individual claim a loss on its losses. That's like me walking up to you and like, yeah, did you lose money last year? And you're like, yeah. And like, how much did you lose? You're like 600. I'm like, yo, I'm gonna claim that. I'm gonna claim your loss on my taxes. That's exactly what's happening. In view of this legal fiction, it's a legal fiction that a trust is an entity for income tax purposes. The taxpayer's beneficiaries cannot show they come within one of the three categories enumerated in Section 23E. The loss in question was not incurred by the taxpayers in any trade or business they conducted or in any transaction for profit, nor did the loss fall in the remaining category. The beneficiaries of a trust were not allowed to deduct pro rata in their individual tax returns and net operating loss of the trust. Listen, so that establishes not only are trusts distinct entities, you don't see them in the list of IRS entities. You don't see them, right? Let's go back to that. Where was that? Oh, we're gonna leave that open. Let's go back to that. Type what I put in types of business. IRS. Business structures. Business structures. My bad. Look, sole proprietorships, partnerships, corporations, S corporations, limited liability. You see, they ain't saying anything about trust. Pay attention. They don't have to teach you. They don't have to. People get on that. So contracts are private. That's number two. Number one, they're contracts. Number two, contracts are private. Contracts shall be governed by the law chosen by the settler, and they're legal and distinct entities. Number three, they are not state structures. They are not state structures. Let's go to another one. Case law. So this is Malley, former collector of the Internal Revenue, versus Howard. Okay, so this is taxes. Okay, this is the four cases that were heard together. Look, let's just, where we going? Where we going? How far? I'm just gonna go to one. Look, it would be a wide departure from normal uses to call the beneficiaries here a joint stock association when they are admitted not to be partners and when they have no joint action, no interest to control. On the other hand, the trustees themselves cannot be a joint stock association within the meaning of the act unless all trustees with discretionary powers are such, and the special provision for trustees in D is to be made meaningless. We perceive no grounds for grouping the two beneficiaries and trustees together in order to turn them into an association. So this was a case where the petitioners involved in a question whether the trustees of three Massachusetts trusts are subject to special excise taxes imposed on certain associations. All right? So if they're associations that come under statutory law. But then we got one more, Elliott versus Freeman. And I'm just going to look. This is an appeal. It was the intention of Congress to embrace within the corporation tax provisions of the Tariff Act of August 5th, 1909. Remember I said pay attention? This stuff is not new. Only such corporations and joint stock associations as are organized under some statute or derive that from that source some quality or benefit not existing at the common law. So you get some sort of benefit or privilege from a state statute. Don't want to do that. But look, organized under some statute. Trust formed in a state where statutory joint stock companies are unknown for the purpose of purchasing, improving, holding, and selling land, and which does not have perpetual succession but ends with lives in being and 20 years thereafter, is not within the provisions of the corporate tax law. What? The facts which involve the construction of corporation tax law are stated in the opinion. There is an essential difference between a joint stock company as it exists to common law and a joint stock company having existence, extensive statutory powers conferred upon it by the state within which it is organized. The latter kind of joint stock companies is found in England and in the state of New York. To such an extent have these statutory powers been conferred on joint stock companies that the only substantial difference between them and corporations is that the members are not exempt from liability as partners for the debts of the company. That's saying a lot. It's saying a lot. Listen. They are not state statutory structures. They owe no allegiance to the state if operated properly. They owe no dues to the state if operated properly. They are contracts. Contracts are private. They are not state structures. Bonus is this: a trust shall be governed by the law chosen by the settlor. That's the bonus. But that's the truth about private trusts. That's why they're so powerful. That's why the wealthy in this country and all over the world, they utilize these structures. That's why we in public schools are taught to use public structures. That's why I contend that the individual is a public structure. But that's something for another topic, for possibly another man, not one such as myself. But all I'm talking about is, getting our private estates in order. There's a reason why, the wealthy get wealthier and, the poor get poorer. The wealthy, they have estates that grow in assets and wealth every single generation. The main thing is they know what structures, they know what form and what substance is required to do business privately, to privately title their assets, to privately title their homes, things of that nature, to own nothing, yet control everything. And that's not including the financial tips and tricks and, things that they do to further create wealth and add to their multi-generational wealth. This is something that I think is 100% necessary, especially in this day and age. And this is why, this is why we do this here at the foundation. Case in point, we do offer trustee training here at the foundation. We are currently, in my opinion, offering the most affordable, cogent, complete trustee training out here. Link in the description if you would like to sign up. Learn how to administer private structures. Learn how to legally avoid taxes, not illegally evade taxes. You'll go to federal prison. It's all bad. I don't want to hear it. Don't write me. I didn't tell you to do that. I'm not a lawyer. I didn't give you that legal advice. I would never. I don't give legal advice. But tax evasion is illegal. Tax avoidance, it's not. Point blank and simple. Thought I was gonna say period, didn't you? But that's what I got for you. We do have a gold tier, we do have a platinum tier, and of course, obviously, I would suggest that there's you do what you can. But this right here, I don't think this is a choice. I think if anything that I said, if this resonated with you in any way, you should email me at admin@welcometothefoundation.com. And I'm going to tell you this. I'm not a salesman. I'm not going to try to sell you and close the sale. I'm private. I don't do that. It's all about contracting in the private. It's offer and acceptance. Offer acceptance, not cajoling, manipulation, coercion. I know what it is. I know what I'm doing. I know how this has benefited my family. I know how it's benefited me. I know how this has established a legacy that will last multiple generations, multiple in the future. And each generation will further solidify my private estate and therefore will further enhance itself in the minds of the beneficiaries and the trustees, that they will protect it even more. As it grows and protects them, they will grow and protect it. And there's nothing the government can say about it, state or federal. And that's one of the most beautiful things, especially what we got dealing with today. Seriously. So, you can link in the description if you already know. You just want to dive in. Boom. We'll get you taken care of. Otherwise, if you want more information on the gold tier or the platinum tier, you can email support@welcometothefoundation.com. But, I think it's time. The time is now. You get access to your own, private membership area on the private side of Welcome to the Foundation. That's where you access all your courses, your materials, messages. Everything is back there. Everything is back there and more. And, if you would like an invite to this and just want to check it out, email me, admin@welcometothefoundation.com. We have how to start a business with trust. Typically, there's a business somewhere. You see a family business. What you don't see is the family estate, the family asset trust, the family business trust, the family trust itself. And a lot of times the private family foundation, if you don't know what I'm talking about, think Bill and Melinda Gates Foundation, the Carnegie Foundation, the Rockefeller Foundation, the Clinton Foundation. Think those types. So, getting started or, I think it all has to do with a business. If you have a job, I think you owe it to your family to start a business. Even if, you only have 10 minutes, let's just say 10 minutes. I was going to say hours, but you say you have 10 minutes a day to devote to that business. $20, you can't beat it. One time. It's yours forever. And we also produce a magazine. It's print and digital, believe it or not. 2024, and you can get a print magazine. We are in the cybersecurity dance right now. That stuff's getting important. You've seen all these hacks. Check out, current events. There's hacks going on left and right. And I think it's very, 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 very important to protect yourself from hacks, things of that nature. Because we live in the age of information. These devices, they're connected to everything. These devices are ubiquitous. We can't falter on that. I appreciate y'all checking out the show. I trust you learned something. I trust you were inspired. And, I trust that you invest in your private education. Like this provided the impetus for you to, invest in your private education. It's very important. Admin@welcometothefoundation.com. If you want to get a hold of me, link in the description for the magazine, for how to start a business, for the Trustee Training Silver Tier. Y'all take care of yourself. Enjoy yourself. Say 10 things that you're thankful for before you go to sleep tonight and every night. It's very important. And I will catch y'all tomorrow on current events. Y'all have a great evening. Peace.